Thanks for staying on with us. This is Hot Stocks. Let's connect with Jayesh Gandhi, Senior Fund Manager, Birla AMC, to talk about the outlook on the equity markets as well as some areas where we can see traction. Thank you, Jayesh, for joining in. Let's start off with your views on the benchmark as well as mid-cap end of the market. What do you make of it in terms of the valuations?
On valuations, our sense is that valuations today are fair. Fair in the sense, if I look at the historic valuations of the equity market and the large cap indices, we are close to the long-term average. If I look at the 1 year forward PE, earnings for FY17 obviously are getting downgraded because of the slowdown in the economy, but at the same time the earnings for FY18 and FY19 are getting upgraded, and our sense is that on a forward earnings basis, the large cap or the large cap indices are fairly valued, and there is a fair amount of scope for investors to make money in line with the earnings growth over the next 2 years. Regarding the broad market, there has been a fair amount of correction in the last 1.5 months. The broad market actually has corrected much more than the large cap market, and that again gives us an opportunity from a medium term point of view. Very clearly the slowdown in the domestic economy, disruption I would say in few sectors of the domestic economy would have a much larger impact on the mid and small cap companies which are predominantly focused on the domestic economy, and that is where there could be earning surprises or negative earning surprises. But by and large, we think that the broad market, particularly the mid and small cap corporates, will benefit immensely as the economy picks up in 18 and 19. GST could be a big beneficiary to a lot of companies, particularly working in the domestic domestic sectors. And for last but not the least, the biggest benefit is the reduction in interest rates. We saw the announcement made by SBI and some of the large banks about reducing the interest rates. Finally, the transmission of lower interest rates is happening to the corporate world, and the benefit of that should be very strongly visible in FY18 and 19. So with a hope and an estimate of a much better FY18 and 19, we think market is fairly valued with a good opportunity to make decent returns over the next 2 years.
So what are your thoughts on the specialty chemical space? There have been big multi-baggers in the last few months there.
So this is a very niche area, an area where Indian companies are slowly and steadily gaining global market share. This is an area which is kind of similar to what the generic Indian pharma companies are capable of, or this area can very well replicate the success that the generic Indian pharma companies have.
Jayesh, since we're a little short on time, tell us about the auto ancillary and engineering space, because there's so many names there. What do you like?
Again, it will be very promising. We think there could very well be a fair number of multi-baggers that investors could find, and we try to find them in our fund as well, in the area of auto ancillary, as well as areas such as domestic products and industrial products and engineering services. This is an area where which is not very large, but it is very niche. Few companies who have the business model right and have the right kind of products and customer base can actually outgrow the domestic economy as well as the global economy, and these are the kind of business models that we typically look for and have found favors and have found places in our portfolios as well.
All right, okay, Jayesh, unfortunately we're completely out of time then, and thank you so much for joining us on Hot Stocks. With that, it's a wrap on this edition of the show. Thank you for watching. Stay tuned for Buy Now, Sell Now.